Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today, we're looking at MP Materials.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. We are looking at a company that is, in a way, destroying its own present to build a fundamentally more valuable future.
That's a pretty dramatic way to put it, but it perfectly sums up the weird situation you see when you look at their recent financials, right? So for Q3 2025, on one hand, they beat revenue expectations. Came in at about $53.5 million against, a $49 million consensus?
Yeah, that's right. A solid beat.
But on the other hand, that same number was still a pretty sharp drop, almost 15% down year over year. So, Okay, let's unpack this. How do you beat estimates but still have revenue fall off a cliff?
Exactly. And that's the core of the strategy, is because this was a completely calculated strategic sacrifice. Yes. Starting in July of 2025, the company just deliberately stopped selling its low-margin rare earth oxide to third parties. That meant, canceling big agreements like the Shanghai offtake.
So they just turned off the tap. They stopped selling a product to prove a point, even though it hurt the top line. Is that a smart move, or is that just a sign that demand is slowing down?
Oh, it's a very smart move. It's genius, really, because they're holding back that raw oxide to feed their own processing facilities.
Oh, okay.
Think of it this way. They're shifting from selling, say, raw wheat on the open market to selling premium finished bread from their own bakery.
And the margins on bread are obviously much, much higher.
Exponentially higher. They intentionally gave up that low-margin revenue now so they can supply their own high-margin magnet manufacturing lines later.
So that's the entire investment thesis, isn't it? The move from just a commodity supplier to a fully vertically integrated manufacturer.
That's the whole story.
Because if you just look at the numbers today, it's a little tough to get excited. I mean, Q3 earnings per share was negative. Net margins are deep in the red. Over 50%.
Yeah, they're ugly.
And yet the forward PE ratio is sitting at, 102? That is pricing in absolute perfection. How do you possibly reconcile that valuation with these financials?
You're right to question it. That valuation isn't based on what's happening now or even in early 2026. The market is pricing in 2027, maybe even 2028 projections.
Wow.
It's all a bet on that massive margin expansion we just talked about. The difference between selling the raw oxide and a finished NdPr magnet for an EV, it's just a whole different ballgame.
So the key isn't how much dirt they're digging up today, but the fact that they've locked in a price for the refined product they're about to start shipping.
Precisely. And that future is already cemented by a price floor they secured. $110 per kilogram for their neodymium-praseodymium oxide starting in Q1 2026.
Okay, so that gives them visibility. It protects them from price swings.
Huge protection. And look, this transition is expensive, but they have the balance sheet for it.
Yeah.
They're sitting on $2 billion in cash versus about $1 billion in debt. That gives them an incredibly strong current ratio of over 8.
Which means they can fund this billion-dollar-plus expansion without diluting shareholders.
Which is absolutely critical for existing investors.
When you invest here, you're not just buying a mining company. It feels like you're buying a piece of critical U.S. industrial policy. You mentioned the moat, and that's where this gets really compelling.
It's fascinating. I mean, the structural advantage they have is just immense. They own the Mountain Pass facility, and that isn't just any mine.
Right.
It's the richest rare earth ore body in the world, and crucially, it's the only scalable mine operating in the United States. That guarantees their supply from the ground all the way to the finished magnet.
And that head start is backed by the biggest institutional investor you could possibly ask for.
The U.S. government.
Yeah, the U.S. government. They've been called a national champion. The Department of Defense has a 15% stake and just made a $400 million equity investment. That is a massive vote of confidence.
It's the ultimate de-risking event for a company like this. That $400 million, it's not just money. It's the strongest possible institutional endorsement. It basically guarantees multi-year demand for their defense-grade magnets.
So it positions them as the go-to secure alternative to the supply chain that's, dominated by China.
Totally. Remember, China controls something like 90% of rare earth processing and magnet manufacturing. That's a massive geopolitical vulnerability for the U.S.
Okay, but let me play devil's advocate here. Is that government backing a double-edged sword? Does the DoD's stake, maybe? limit their upside by locking them into lower margin defense contracts?
That's a totally legitimate question.
Yeah.
And yes, it does tether them to certain national policy goals. But right now, the framework seems designed to help them achieve commercial scale first.
So the pros outweigh the cons for now.
By a lot. The immediate benefit, getting the funding to build out, is huge. The DoD provides that foundational demand while they go after the much larger commercial EV and clean energy markets.
And the partnerships aren't just in Washington. I saw the deal with Apple on recycled magnets, but maybe the more strategic move was that joint venture with Saudi Arabia's Maiden. Why Saudi Arabia?
That's all about diversification.
Yeah.
It signals global confidence. So while the mine is in the U.S., they're building a refinery with Maiden to expand their geographic footprint outside of both the U.S. and China.
Smart. A way to mitigate risk and tap into that huge Saudi capital pool.
Exactly.
Which brings us back to how they're spending that capital. Over $1 billion going into two things: heavy rare earth separation and the new 10X facility, their second magnet plant. Let's focus on the separation part. Why is that so hard to do?
That is the real technical bottleneck for the entire world. Heavy rare earths are vital for high-performance magnets that operate in extreme heat.
Yeah.
Think military jets or high-end electric vehicles. Separating those elements is incredibly complex, which is why China has dominated it for decades. By building this capability here, MP isn't just building a plant. They're solving a major national strategic problem.
Okay, let's pivot a little to the technicals on the stock itself, because you just can't ignore the performance here.
No, it's been an absolute monster.
An incredible 187% rally year-to-date through November. It went from about $15 a share to over $100. Essentially, like, that usually needs some time to, cool off.
It does, and it has been volatile. The stock's beta is high at 1.7. But the consolidation we're seeing now, a lot of people see that as institutional accumulation, the big money getting in.
And technically, the uptrend is confirmed by that, what's it called? The Golden Cross.
The Golden Cross, yeah.
For those of us who don't live and breathe charts, what does that mean in simple terms?
It's one of the most reliable bullish signals. It just means the shorter-term trend line, the 50-day moving average, has crossed above the longer-term 200-day moving average.
So momentum is shifting positive for the long term.
Exactly. The 50-day is around 65.50, and the 200-day is at 58.49. It suggests the bullish momentum is structural and likely to stick around.
So if you're looking at this consolidation as a potential entry point, where are analysts seeing key support levels?
The strong support seems to be in that $52 to $55 range. That area is what many consider the sort of ground floor for this whole strategic pivot.
Let's talk about the big if here, because that's what that 102 PE ratio is all about. Execution risk. What happens if the 10X facility gets delayed?
That is the #1 challenge. These are massive, complex projects. A delay of even 6 months could push back profitability and, could trigger a really steep correction in the stock price.
Because the current price assumes near perfection.
Total perfection.
And this brings up the elephant in the room. Insider trading, insider selling. The CEO sold over $24 million worth of stock in December. The CFO sold over $2 million. How should we interpret that? It doesn't look great.
It absolutely requires scrutiny. You can't just dismiss $26 million in selling. However, context is really key here.
Okay.
You have to distinguish between someone panic selling on the open market and structured sales plans. After a 187% rally, a lot of executives have these pre-planned 10b5-1 arrangements that sell shares automatically for them. It's for diversification, for taxes.
And the other side of that coin isn't just the plans, it's who is buying, right?
Exactly. Those insider sales are being offset by significant institutional accumulation. And most importantly, the execution risk itself is mitigated by the government's vested interest. The DoD needs this facility to succeed. They're not just a source of capital, they're a partner.
Okay, let's wrap up with some key dates. What does the listener need to track? When do we see if this is all working?
The first big test is the Q4 2025 earnings report. That'll be late February or early March of 2026. That report absolutely must show a return to profitability and give strong guidance.
And when do the actual magnets start rolling off the line? When do they officially become a magnet producer?
The physical milestones are happening as we speak. The Independence Magnet facility should be online by the end of this year, 2025. That's a huge milestone. Then looking out a bit, that complex heavy rare earth circuit should be commissioned by mid-2026.
So the thesis is clear. MP Materials is making this profound shift from a raw material miner to a strategic, government-backed, vertically integrated magnet producer. The short-term pain we're seeing was a calculated cost to get to that long-term, high-margin future, and now it's all about execution.
That is the entire game. Tracking those Q4 results and any updates on the 10X facility will be absolutely vital. The floor for this company is provided by the U.S. government, but the ceiling depends completely on their ability to execute. So make sure you subscribe to stay informed on these critical updates.